For many people in Africa, traditional mortgages are out of reach. This could be because of extortionately high interest rates or the short durations of the lending. For those working in the informal economy, they may often have no access to mortgages at all. But what if home ownership could be possible without a bank or a traditional mortgage? In this episode, we explore how Empower is using blockchain, the same technology behind Bitcoin, to create a pay-as-you-go model for affordable housing. This digital innovation could open up new paths to home ownership, but will it work on a large scale? Tune in to the Flywheel Economics podcast to find out if blockchain can change the future of home ownership in Africa. Welcome to the Flywheel Economics podcast. Flywheel Economics is a concept that proposes true, sustainable economic growth by viewing economies as ecosystems. I'm your host, Richard O.
And I'm your co-host, Favor Ogbadu. Together, let's explore a more sustainable and powerful way to view innovation, investment, and economic policymaking.
Okay, so Richard, in this episode, we are back with our affordable housing mini-series, which is a mini-series I am thoroughly enjoying. It has been a fascinating ride so far. So we started with a scene-setting episode with Ian Shapiro, the CEO of Real, where we discussed all things affordable housing, especially from his perspective as working within the space. And then for episode 2, we were with Sumida Naik, who is the CEO of Syntellect, and there we were able to discuss the different products that they have using artificial intelligence and machine learning to provide affordable housing finance options for the unbanked and people in the informal sector. And for episode 3, we were with Simon, who is a World Bank specialist, where we discussed affordable housing finance. So it has been such an awesome ride so far. And this is episode 4 of our mini series. And I dare say it has to be the most fascinating yet, in the sense that the correlation is not immediately drawn between the topic. We're talking about blockchain today, and I know when people hear blockchain, the first thing that comes to mind is NFTs or cryptocurrency or Bitcoin, but that's not exactly what we're discussing today.
NFTs, my goodness, I'm not even sure I know what an NFT is. Non-fungible token or something like that?
Yes,
anyway,
yes.
So certainly not the first thing that comes to my mind with it, but I mean, I've heard of crypto, I've heard of Bitcoin, the basic stuff, but what was really nice with this episode is being able to explore the potential that technology that powers cryptocurrencies has for helping people sidestep one of the big challenges in Africa and across the world around accessing finance for affordable housing, what do you do when the mortgage market isn't there or you can't access the mortgages? And I think one of the great things about I don't know if it was our second or our third episode, I think our second episode with Syntellect, was that they were exploring options, how those in the informal sector might be able to get a credit rating in order to then access a mortgage. Now, this episode is even more fascinating, or not even more fascinating, but it's fascinating in a different way because we're exploring what happens if the mortgages aren't there at all. And I think this is where there's a real unique opportunity for blockchain to come into its own. So without further ado, maybe we should go to our guest that we've got on this week. Favor, who have we got?
For today's episode, we have Glenn Jordan, who is the CEO of Empower. And Empower is the organization dabbling in this really fascinating blockchain technology to provide access within the affordable housing sector for individuals and people who normally would not have access to some of these finance options.
Okay, let's go over to Glenn.
Hi, Glenn. Once again, thank you so much for coming on the show. So my question is, what motivated you to start working on affordable housing in Africa, and how did Empower come about?
Thanks, Favor, and very nice to be here. Empower was born actually out of a a shocking realization I made. I'm Zimbabwean born, and I was running a fintech in Cape Town in South Africa for my fellow Zimbabweans. And I was approached by a Dutch asset manager to look at pensions for people who weren't formally employed. And it was at that stage that I started researching how we could create pensions for people who weren't in the formal employment system. And I spent a long time, actually up to about 3 years, researching this and trying to find ways to support people's savings or assets. And I was shocked to discover that I was living in an area called Hout Bay in Cape Town. And Hout Bay is a wonderful microcosm of the world where you have formal and informal sectors living cheek by jowl. And there's an area in Hout Bay called Imizamayetu, which is the informal settlement where people live in shacks. And there's other areas where people live in formal housing. And while I was doing my research, I discovered that the people in the shacks were paying between 4 and 7 times more per square meter to rent the land on which they had to build their own shack, compared to people living in an apartment, in a formal apartment in the center of Cape Town. And when I realized that, first of all, I was shocked because, to be honest, I was under the understanding that people actually didn't pay to live there. So that was my first complete misunderstanding. And the second was obviously the amount that people paid. So the realization at that stage was, this is not a poverty issue. It looks like a poverty issue, but it's actually not a poverty issue. It's a systemic issue. And once I started looking at the systemic issues that weren't being addressed, I realized that we had to do something about it, and hence Empower was born.
Thanks, Glenn. And that's quite striking, just to see how much of the, to see that people living in shacks would be paying more per square meter or square foot than those in the formal sector. So that's a very compelling motivation to try and do something about it. Your company, Empower, are heavily involved in digital innovation. This is one area where I really struggle to keep up, and I really struggle to follow some of the terms. Could you explain a bit about, for those unfamiliar, what is blockchain and digital assets, and what type of digital innovation does Empower do?
Yeah, thanks. And it is one of the confusing things, because as in most new technologies, the language also gets used interchangeably for things like digital assets, for blockchain, for crypto. And actually they are different issues, and they're different things. And that's often what causes the confusion. So often when we talk about crypto or blockchain, the immediate assumption is we're talking about Bitcoin, because Bitcoin is the poster child of the technology. But actually, Bitcoin is just an application, a digital asset that sits on the blockchain technology. And so a blockchain technology is a decentralized technology. And the decentralization is the key part around that, because it means no single entity controls the network. So the decentralization is vitally important, particularly in areas where institutions and structures don't work. And so we'll come back to that in this discussion, because that's why the focus on this technology. So that's the blockchain is the decentralized technology on which we build immutable recorded assets on the blockchain. And so what that means is a transaction is recorded in a time stamp, effectively in a chain that continues, so that every transaction that is written is dependent on the transaction before, which means that it is immutable. It means that it cannot be changed. It means that that information is now set, and it's static, and it's therefore can be verified, and it provides a level of trust in a trustless society, in a trustless environment. So the Bitcoin is a cryptocurrency that sits on top of the blockchain, but the blockchain is effectively a mechanism that we enable decentralized transactions to happen through consensus. So all of these become challenging, but I try and say to people, don't worry as much about the underlying technology. Really look at the application and why it's being used. So for example, all of us, we sit on our phones all day, on our smartphones, and we press buttons, and we don't understand how TCP/IP, the internet protocol, works. We don't understand that. We just press a button, data comes, it goes, we send it to somebody. All of that works. It's really the application around how it works that's best understood. And if we can look at that, and then because the trust in the underlying technology is being built, as we've seen from the growth in the technology.
Oh, that's really fascinating. And no doubt, blockchain is a cutting-edge solution, but some argue that it's not always necessary. So why do you believe blockchain is the right tool for solving housing finance challenges?
Yeah, and you're 100% right. It often, as in all new technologies, it becomes, people focus on the technology, again, rather than the application. So it becomes sexy to use it. So you're 100% right. There are occasions when it's not required. But in this case, where it is incredibly useful is, as outlined, is where financial institutions don't work. This is where it becomes, and the decentralization. So in other words, if you have a financial sector that is not functioning, this is when it becomes useful, when peer-to-peer becomes very useful. So to give you an example, in the housing space, the mortgage is the only product that we have. If you and I want to buy a house in the developed world, we go and we access a mortgage. There are very few of us who can afford to buy a home cash. So we go and we access a mortgage. That is the product that has come from the developed world that is put in place in order to meet the needs of the consumers and of the banks to provide funding into the sector. So it's a wonderful system and it works brilliantly. In Africa and the rest of the developing world, more than 85% of income is informal. That means it's intermittent and variable. That means a mortgage cannot function. So this is one of the reasons why, for example, when we started work in Mozambique, there were 600 mortgages in a country of 30 million people. 600. So the systems don't work. And that's when it becomes really useful to provide alternative mechanisms, because the banking systems can't deal with informality. All the rules, regulations, Basel, all of these kinds of things are based on risk in a developed world environment where you have the information on formality. When it's not formal, what do we do? How do we create mechanisms to enable people to have access to finance and the distribution of capital in order to get that to the people who need it most, as well as getting the returns from that? And blockchain is the ideal technology to manage that process and enable that to happen.
Thanks, Glenn. Before we get into some of the past experiments and pilots that Empower have done using digital innovation, I was wondering if you could talk a bit as to what you then see as the solution. What is the sort of the ecosystem of digital innovation that you're bringing forward that you see as being able to help to address where the financial systems aren't working?
As in most systemic issues, unfortunately, we have to address the entire system. So we have to look at particularly both sides of the equation here. So we've approached it in a 3-step fashion. So the step 1 for us was to address this informality. So this intermittency, if you like, of income. How do we create, if you don't have access to credit data, how can you lend somebody money for a home that they can pay off? So the whole process around this is, mentioning there's no ways in a country like Mozambique only 300 people can afford a home. That's obviously not the case. But the point around that is, if you can't prove that, if you have no credit histories, no credit bureaus, and you have none of those systems, how do we put that in place? So we have created a pay-as-you-go mortgage, effectively, which then, so just the same as airtime, when the first launch of airtime was, a contract. You paid for a contract, and from Africa emerged pay-as-you-go airtime, where you could buy and utilize it. So we're saying the same principle needs to be applied. The flexibility needs to be applied for payments of housing, of mortgages. If we can create that, then people effectively, it's like self-build. but in reverse. So if you drive around any developing country, you'll always see half-built buildings because people can't access finance. They invest and build as they go. So they're literally saving over time by investing into the property. So the process around that is, how can we reverse that process? How can we enable somebody to move into the home and pay it off on the same kind of flexible basis, which is the pay-as-you-go mortgage?
So just a follow-up on that, Glenn, and that sounds like a fantastic innovation. Suppose I've been able to move into my home and I've got this pay-as-you-go mortgage. Why do I bother to then make payments then once I'm in? I've got the house, I'm enjoying all the facilities of it. Why would I make payments as required?
Because effectively you're a tenant in the house until such stage as it's paid off. It's not your asset. So the functionality is the same as if you're a tenant. So that's why. So yes, you have access to it, but it's the same as if you were renting. So the joy of it is that you have the access to the home while you're paying it off. So it's the self-build, as I say, in reverse. So the benefit of that, and what we've demonstrated, is that the excitement around that, because everybody wants to own their own home, the excitement about the opportunity to actually own your own home in an environment where before you had no access to finance, creates a mechanism by which people are really enthusiastic to pay it off and to own this home. And so that's actually the process by which it works. So the reverse actually is true in this environment. And that's again, it's one of the things that we have in this developed world-centric financial modeling. And that's one of the challenges we have to overcome in our thinking all the time, is that we think like developed world thinkers, and the process is around understanding the market and giving the market the products and tools and resources that they need to actually implement what they're requiring. And that's part of the challenge that we have.
So I guess then it's a bit like when, so if you're looking at the carrot and the stick in all of this, the stick is the same as you would have when renting a property. You could face eviction or whatever. The carrot is that you can actually own the property at the end of all of this, right? And you own a substantial asset. Is that the right understanding?
100%. And the joy of that is that as a tenant, if you like, the fact that it's your asset, the behavior, it changes the behavior too, from the point of view of looking after the asset, because it's your asset at the end of the day. So that also fundamentally shifts behavior. So absolutely, carrot and stick, as always, required for all of these, because you do get good and bad actors. As in all things, you get good and bad actors, and that's required in order for this to happen. It's also required to address risk, from capital risk, because obviously the ownership of the asset doesn't transfer until it's been paid. So that process still needs to be the same. So the risk sits with the asset owner. So that from a capital provision perspective, we also need to address the risk. Which is
great.
Which is coming back to your question in terms of the approach. That's the second part of the equation of addressing the system, because so now you've got somebody who's paying off a house, paying it, and we're recording those transactions, and it's demonstrating return. Now it's how do we attract capital and distribute capital into this environment if the banks can't do it? So if a bank can't do it, how can we do that? So we support it through various entities, and it can be a bank. It doesn't exclude the banks, particularly if they're enthusiastic, but it can also be done through SME, through the lending to the developer, or through asset-backed securities. So to actually take those units and package them up into financial products effectively. So there are three ways that we can do that and attract that. And again, the digitization of that becomes a part for both primary and secondary capital raising, because liquidity, housing, by definition, housing expense mortgages are long-term products, long-term financial products. So if you're investing, you may not want to be stuck in a housing project for a year or multiple housing projects for 20 years. So how can we trade in and out of this? So it's around creating instruments that enable that, so we can price it effectively from returns that are demonstrated, that we given immutable data on the payment rates, and we can price it, and we can provide the liquidity from the digitization of that and the tradability of those assets.
Great. So if I'm an investor and I quite like the idea of being able to help people in Mozambique or other places have, secure, well-built, affordable homes. What's in it for me beyond the warm glow I get from helping it? What sort of return might I get from investing in this type of asset? And what's the benefit of that as opposed to any other asset I might invest in?
Yeah. So apart from the warm, fuzzy feeling, which obviously is fantastic because it is fundamentally transformational, the whole objective of what we are seeking to achieve is that, so you are sitting in the UK, okay, and you've got GBP. Now, the challenge again of investing into Kenya or Mozambique or whatever in this environment is you've got currency risk. So part of the challenge and part of what we're building, again, built on the blockchain and through the use of digital assets, is the mechanisms to enable us to mitigate that currency risk, which is fundamentally key. So our objective in order to raise capital into the space, we have to be competitive. We are never going to be competitive if you invest in Naira and the currency declined by 50% in that first year. Your investment is not going to be worthwhile. So how do we create a mechanism to do that? And that's the process. Again, that's the step 3 in our ecosystem that enables us to support that mechanism. So the objective is that you will invest, you'll be able to get effectively a greater than risk-free return. Okay, so you'll get a higher rate of return from the asset in the emerging market in hard currency. That's where we're working towards, and what we're working towards right now. That's step 3. We haven't got there yet, but we're busy with that process as we evolve. That's the objective in terms of getting that, because we need to attract capital into the space. There's a backlog of 50 million homes in Africa. That backlog will never be addressed if the capital is not competitive, if it's not competitive to provide returns on that capital invested.
I'm interested, Glenn, in understanding your journey to get to this point, because I understand, you've spoken about your motivation at the beginning. You've spoken about seeing the problem and seeing something which it looks like there should be better solutions towards. People shouldn't be paying more if they're in informal settlements, if they're in sort of shanty buildings or whatever. It shouldn't cost them more per square foot. That's very strong motivation. But it sounds like you've been trying to take quite innovative approaches towards it, like the one you've come to, but that you've had a series of attempts towards trying to solve the problem in the past. Could you take us a bit on that journey with you? Because I understand you use things like NFTs, and maybe if you could just quickly explain NFTs for the audience as well, and then talk us through your experiment with that.
Yeah, so exactly. So in typical startup fashion, as you can imagine, you go down a path, you try something, it works or it doesn't work. If it works, you start scaling it. If it doesn't work, you pivot. So to your point, an NFT is a non-fungible token. So now a token is a digital asset on the blockchain, and it can either be unique, which is non-fungible, or it can be tradable. So if you think of a Bitcoin, one Bitcoin is the same as another Bitcoin. They're not unique. A non-fungible token is a unique instrument. So it was at that time when we launched it, it was the art was the big thing. The bored apes and the kind of artwork that was big at that time. And we thought, wouldn't it be brilliant if you could have a piece of art that you bought that was supported perhaps local artists in the area. So, if a Mozambican or Kenyan artist, unique art, or even international artists, famous artists, it was work of art that provided you that warm, fuzzy feeling because you were making a difference when you bought it. And it provided you with a financial return. So when we went to market, we launched, and that was how we did our first project in Mozambique, because those homes that we were talking about We raised the funding through the selling of that artwork, effectively. But it was designed to provide that return, because what we thought at that time is one of the challenges of emerging markets is the interest rates are extraordinarily high. So if you can get a mortgage in Mozambique, it's 28% for a mortgage in any event. So we thought, well, if we can put a value to the art, we can reduce that in terms of interest that's returned, so that, there's less demand for and that 28%, part of the reason for that is the currency depreciation. So we thought, well, if we could mitigate that risk by artwork, we could do that. What we found through that process was twofold. One, obviously the bottom fell out of the NFT market, so it wasn't going to be sustainable. But the second point was interesting, and we hadn't taken into account, was that as soon as you put any financial aspect to anything, the rest becomes irrelevant. And that was a key learning for us. It sounded great in theory, but in fact, in practice, it didn't work, because as soon as you put any kind of return, that's what people focused on, and the art became irrelevant. So that was the learning from that. And so that was part of the journey and part of the pivot, which we realized we had to focus more on the financial side than just, then obviously creating value elsewhere, which is what we were seeking to achieve.
Thanks, Glenn. Really fascinating to hear about how far Empower has come. And I understand that Empower has been active for some time now. What impact have you had so far? And can you share examples of how your model is making a difference?
Yeah, so we have been around for a while, and the progress is, as always, as in any startup, and particularly when addressing affordable housing and the urgency of it, it's slower than we would like. We would like to be at the millions of homes, and we're not there yet. But the impact is still profound. So to give you an example, when we started, as I said to you, there were 600 mortgages in a country of 30 million people in Mozambique. Just with our selling of the NFTs, we provided home funding to people who didn't qualify for mortgages for 30 homes. That grew the home loan market in Mozambique by 5%. Now, that's ridiculous in terms of that, but it gives you a sense of the kind of impact that we can have and the speed with which we can have it. Because not only did we address that in terms of growth, but it opened the market up, because right now, as we said, if 85% are immediately excluded because it's only 15% of income that is formalized and therefore recordable, how many of those people actually qualify for a mortgage? So we've actually opened the market up from 0.05% of the market to about 60% of the urban market. So again, it's the opening up of this market that has created the profound impact. The other issue is also around women empowerment. 50% of those households are led by women, and that's not just because it's a nice thing to do. It's also a business imperative, because actually women are better household owners and payers in any event. So it's the right thing to do, but it's also a good business thing to do. So with the profound impact on women, the profound impact on financial inclusion, the other aspect around it was environmentally. So by reversing the self-build, if you like, the challenge with self-build, and the only other housing product that you get is a microloan to do self-build. So in other words, to buy a few bricks or something for the roof. The challenge with that is that it's informally built. So in Beira, in Mozambique, where we started our project, when Cyclone Idai struck, more than 80% of the housing stock was lost, because it's been badly built, because it's been self-built, because it's unprofessionally done. So by reversing that process and enabling people to move into a professionally built house on this kind of basis, we were able to provide climate resilience to those families, that when the next cyclone struck, they didn't lose their house or their possessions, because as you can imagine, when you lose your house, you lose everything in it. So the challenge for that, and that's as part of what we're really advocating, is by doing that, we're able to build resilience, urban resilience, for millions of people in a profound way, in a self-sustaining way, in a non-charitable way, in a way that provides return on investment at a commercial rate, et cetera, et cetera. So this is not about charity, but the impact is profound, absolutely profound, because the quality of life, the improvement in the quality of life is immeasurable, actually. But I mean, I've got a wonderful story about one of the women who moved in, who it was the first time she had a lockable door against her ex-abusive husband. And that in and of itself makes the story brilliant. But it's the impact of that process on the impact of her life and on her children's lives that is so profound, and yet it's still sustainable. And I think that's the key part around this. And so the impact of what we're doing is immense in terms of that, from a climate, family, education, wealth creation. It ticks every box. And that's one of our challenges, actually, is that we often fall between stools because people are focused on one aspect of the SDGs as opposed to a number of them.
Thanks, Glenn. And that's a very powerful story and shows how empowering having good, quality, affordable housing, what a difference that can make at the individual level. So thank you for sharing that. And I wanted to ask around, your model. So when you're, in terms of the houses themselves, are you working with existing developers who are there and they've already got a design for a house, or are you saying, here's the model we want to use and we want to roll out? I mean, how do you choose where you're going to put your ecosystem of financial support in?
Yeah, thanks. And it's a great question, because it's one of the fundamental questions, and it's one of the reasons why the business is called Empower, because it's really around empowering from the bottom up. One of the greatest challenges we have across the continent is that when trying to address issues, we do it from the top down. So you'll get these large-scale projects and Africa is littered with them, where you get these large-scale housing developments that are done that don't meet people's needs, that are priced out of their price range, and are just fundamentally a mismatch to the market. So the supply and demand, there's a mismatch between supply and demand. So part of our Empower Pay system, the step one that we've spoken about, the pay-as-you-go mortgage, is for the developer, in order to de-risk that, it's around them to be able to match supply and demand. So they build the sales funnel through the platform so that we can get a sense of how well they're meeting supply and demand. So the part around it is that we are supporting the developers on the ground. We are not advocating that we know the best product or the best process or what the structure is. What we're saying is that if the developer can demonstrate that there's demand, so particularly for this installment sale / rent to own model, if there are 100 applicants for 10 properties, to your point earlier, or to your question earlier around what happens if somebody doesn't pay, they could be moved out, and there's a pipeline of potential tenants who want to come in. So we know that, and then we know that the supply and demand are being met in a way that meets the needs. That's a de-risking mechanism for capital. It's a tool for the developer to know and understand his market better, and it enables the technology to provide the data that provides the kind of investment thesis that supports this process, that enables that and de-risks it from a fundamental perspective. So that's the key part around it. So the deployment is very much through and supportive of players on the ground, not trying to start. And for that model, what we're doing is we're saying, start small, build success, and scale. So you can very quickly, so we're using the unsecured lending model, if you like, or the startup model to say, work with developers. Some will fall off. Some won't perform that well. And we can build the data that demonstrates the good ones and the bad ones. And so that we can then reward the good ones on an ongoing basis. That enables us to manage the quality better, et cetera, through the technology, but it's supportive of what's existing, not prescriptive from the top down.
Thanks, Glenn. And that sounds like a very powerful model to use. It also reminds us of when we spoke with Ian Shapiro of Real, and they were talking about their own, because obviously when you're trying to solve such a big problem like affordable housing, there's going to be lots of trial and error that's involved in getting to something that works. And I remember Ian shared with us the story about I think it was Pakistan, they were doing affordable housing, and they had some designs for houses which were, the specification was very good. It could withstand earthquakes. It could, much better than the typical model there. And nobody was willing to buy it. Nobody was willing to, even though the specification on paper was very good and higher than a lot of the other things out there, it wasn't to the tastes or to the cultural acceptance of what people wanted to buy. And therefore it hit a dead end. And it's interesting to hear your example there, because obviously you're trying to avoid that to the extent possible.
Absolutely. 100% in agreement with that. And Keisha Rust from CAF, the Center for Affordable Housing Finance, talks about the massive small. The only way we're going to address the 50 million backlog is through the massive small. It's not going to be the one-off big project. It's obviously that has a place to play, but actually these players are already in existence. They're already in, they need support, and they need technology tools to help them get better at what they do, which is obviously what we're providing. But the issue is it's addressing it through the massive small. That's the key to actually building this at scale.
Thanks, Glenn. I mean, I don't know the situation in Mozambique, but I know in a lot of countries, whether developed or developing, a lot of property developers tend to go into the more premium real estate side of things, right? Are you seeing any challenge that potentially you may run out of developers trying to service your market, which is the affordable housing side of things? And will that potentially constrain your growth in the future? And do you have a plan if that is likely to happen at some point?
Yes, absolutely. And to your point, you're 100% right. And the question that we keep asking of the DFIs and the major funders in this area is why? Why do they go top end? And it's very obvious. It's because you can sell it at the top end because people have access to finance, or they have enough money to pay for it. The bottom end, nobody's addressing that market because you can't. If 85% of that market is excluded before you start, how are you going to sell that product? So nobody's developing for that market. So to your point, the whole thing around that is this enables the developer to move down market, which is actually where the scale and the market really is, the growth market actually is. So to that point, and also we're in discussions with various academic institutions in the Netherlands and the Affordable Housing Institute to support developers on this kind of basis, so that we can build the skills and support them in terms of moving into this space. So to provide them, what we're saying is they need a technology base to help them to build the market, to demonstrate that they are investable, to prove that. And once they start to build that data, then they become investable. Then we can support that process and help build them out, because we need the number of players. The number of players in Africa that are doing affordable housing is severely limited. But there are lots of players in the market who would like to get into this but can't sell their product. And so how can we support them? By enabling offtake, by supporting offtake. And that's the process that we're busy with in Kenya right now as we speak.
So I want to take you back a bit towards the area which you said you're still sort of working through, which is around the investor side of things and trying to get that model which can work well from that side. It'd be great to get your vision, because if I think about things like, blockchain related type products, whether it's like digital assets, whether it's like Bitcoin or something like that, in my mind, the investors I'm thinking about are more individuals rather than institutional investors, right? So how do you see this going in terms of the investment in the future? Is it going to be an army of small investors who want to take a punt on something a bit high risk, potentially good return and but with some good feel-good factor about it because you're making a difference on people's lives? Or do you think it's possible to go to some of the big institutional investors, the sort of are pension funds ever going to put money into this? Or what's your thinking around that side of things?
It's both. Okay. So to address the market, to address the backlog, we have to call all pockets. We have to get as much capital as we can into the space. To your point, the only way we're going to get that is by addressing all of their market needs. So the issue around that is, so in the developed world, how the market works, it works fantastically, is if a developer develops houses, he then sells them to individuals who go to the bank, get a mortgage, buy them, the developer gets his money, and then moves on to the next development. Works brilliantly, and everybody's happy, and you have 20 years to pay off your mortgage. Okay. In this environment, but then what the bank does is it then takes those mortgages, securitizes them, and on-sells them. Okay. To pension funds, etc. What we're saying is, okay, in an environment where that doesn't work, where you haven't got those mortgages, we are creating effectively the digital financial instruments that are the securitization of that instrument. That is then investable by banks, pension funds, and or consumers, because that provides you with those returns. That's the model that we're seeking to create. So those digital assets are representative of the income streams that come from the payments for the housing. That's the process by which we're developing it. So it's very much been focusing that on the institutional funds as well as the private funds that just become worthwhile to do that. The reason we're building it on this technology is to make it more cost effective, because the more cost effective it is, the less we have to have, all of the structures around it that just add to cost, the more we can pass that cost benefit on to the end consumer, which is the big challenge.
Thanks, Glenn. I remember probably about 5 or 6 years ago, I was speaking to someone who was on the board at a pension fund within Nigeria, and they were telling me, I was asking them, why are you just investing in government bonds, right? Why are you going for the safe stuff, the stuff there's so much transformation that could potentially happen if you put money into, the real economy. And, things like what you're doing would be a great example. And the comment he made back to me was quite an eye-opener, which was, they're sort of, as a board, they're entrusted with the pension funds, for people, for future generations, right? And in a context where there's been problems with pension funds in the past, right? People have gone to jail, people have lost lots of money for things. So if you're on the board or if you're on the investment committee for one of these pension funds, what's your incentive to do something a bit different, do something a little bit riskier, maybe go into a space like you're in where presumably the regulation is either not there or it's sort of a bit of a new area, emerging area? What's the incentive to sort of take the risk and go for that, even if it may be really good for the future of the economy?
Yeah. So that it's a great question. And that's the whole challenge around what we're seeking to achieve, is because we're trying to de-risk it for those pension funds. So around the digital asset part of it, that's just a way of doing the product. It's not the fact that you're buying a digital asset. So we're working with the Nairobi Securities Exchange at the moment in Kenya for exactly that reason. So that asset is legitimized by two things. One, the information, the cash flows, the data that it's coming back, it's immutable, it's recordable. We're not reliant on some developer's income statement and balance sheet that can emerge 3 years later after audited financial statements emerge. How is that portfolio performing? I can have a view of that today. I can know what those cash flows are doing today. That creates a mechanism by which I can price that risk in, and I can trade that risk. I can trade out of that risk if I perceive it as too high. So to your point, that's exactly what we're seeking to achieve, but that needs to be built on data. it needs to be built on immutable, trusted data. And part of the challenge that that pension fund has had to date is, how do I invest into that real world? What does that look like? If the banks aren't putting it in because they can't deal with that informal market, I can't invest in a non-banking institution, because it means putting it into a developer. And as you say, again, more stories around developers driving Range Rovers. So the point around that is how do we ensure that the money is going to where it should be going, which is, in other words, a unit that's already been developed. So we de-risk it by doing that. It's around the offtake, or in other words, the mortgage equivalent. So it's not around the development of the asset. It's around the financing of the asset. And in an environment where that asset is increasing in value, as it is across the world right now, these housing assets are increasing in value in Abuja or in Nairobi. There is significant improvement in value. It's an asset that's increasing in value. It provides an income stream, but how do I know that? How do I record that? How do I have access to that? And that's where this immutable data is so key. The immediate access to immutable information around how this cash flow is actually being managed and how it's been recorded becomes key to this process around building the trust. So to your point, it's around de-risking it, not adding to the risk. It's around creating a mechanism that enables that pension fund to invest. And that's why we're working with the Securities Exchange to do that, to create that mechanism that it becomes investable, that this instrument becomes a trusted instrument. But it's not just the instrument that's trusted, but it's the underlying cash flows underpinning that instrument that can be trusted. And therefore, that becomes very real and very investable, and it attracts investment into the space from the pension funds as well as international investors. So that's the key part around building that. Does that answer your question?
Yeah, thanks, Glenn. I mean, I'm really fascinated to hear how you're getting on with convincing some of the regulators, the Securities and Exchange Commissions and all the rest of it, because it must be a tough sell, right? Particularly if people, or is digital currency become so mainstream now that actually people are starting to see, or,
They are starting to see. When we started 3 years ago, I mean, I had institutions say, we will never deal with you. You've got no chance. That has already fundamentally shifted because, as you say, it's emerging. Is it a tough sell? It's a tough sell because there's mistrust, because of burnt fingers historically, because of bad examples prior to this case. So the interesting part is it's more historical than current, actually, is the issue. The technology is becoming more and more trusted. The digital assets the MiCA has helped immensely. MiCA in Europe, being able to say if there is a legislative environment that we can put in place around these assets, around this technology. This is not cowboy stuff. This is really using the technology for what it's been designed to be used for, which is to provide trust, to provide immutable data, to provide, record of flows of value. That's what we're seeking to achieve in order to do that. So to your point, it's more the affordable housing space that's the challenge. But yes, it is a challenge, but it's all around building this and around proving it as we go and building the data. That's the key part around it, which is always the challenge, is that, I don't want to invest until I've got the data, but I can't get the data until we've got investment. That's the catch-22 that we're stuck with.
So in terms of your journey so far, where are parts of that financial ecosystem up and running at the moment? If I wanted to buy the coin or buy the asset, the financial asset there, or invest in it, could I do that now as an individual? Or
not as an individual, because we after the NFT sale we stopped addressing it at individual levels because it's perceived as a financial asset. So we're dealing with investors at the moment. So no, not as an individual at the moment. What we have done for our community is we utilize our own digital asset for supporting collateral. So for first loss. So again, we use the digital assets in a unique way there to provide a liquid first loss collateral. So to your point, as a consumer investor, if you like, you can invest in our token for collateral for the developers. but it's not not specifically in these financial products, which is really what we're seeking. Where right now we're talking to more traditional investors to invest into this space, particularly in the developmental space, because it's around, we need the data to demonstrate that. So to your point, we're building the data, we're demonstrating the success of what's in place from the payment side, which was the first building block. Now we're building it from the investment side, so the digitization of that and linking those two for the professional investor. And then it'll be to bring it all together into an environment that we can get everybody to invest into this space.
So, Glenn, I mean, are you a social enterprise? Are you a not-for-profit? Or do you think there's actually a viable business model in this which could make money over time?
We know there's a business model in this over time. The question around it, and we're a private enterprise, and the reason we are is because we're trying to attract private capital into this. What we've tried to avoid is the VC environment, because what we're saying is we don't want, we do believe that this is a very viable business model and it can create significant value, but we don't want it to be exploitative. So this is not about trying to maximize the profit. We believe that there can be a fair profit that's made by instituting these kinds of systems and supporting these kinds of processes, because the scale is so required and so potentially large. So absolutely, we believe in private enterprise principles throughout, which is why we're a private enterprise too, because it's the same. We need to be able to perform and be able to provide returns, but it's not about, as I say, exploiting it. It's not When Moon. We're not trying to go, to the moon. We're going to provide we're going to be a unicorn on the basis of by extracting value out of the consumer, because that's not the objective. The objective is to become a unicorn by providing value across the ecosystem.
Glenn, just taking this a slightly different direction now. You spoke that you're from Zim. You've sort of been in that environment where conventional currencies fail and let people down in a substantial way. How much of that do you think has been a driving force in your own approach, your own creativity, your own innovation and ability to work around problem? Do you think that that's a big part driving your company, yourself and your company, towards innovative solutions?
I do, Richard. I think, the thing is I've seen how when I started looking, somebody said to me, look at, you need to look at blockchain. And I was also confused between blockchain and Bitcoin. And I went, no, Bitcoin's too volatile. It'll never work for us. They said, no, look at the technology. And once I started investigating the technology and the power of decentralization, the power of peer-to-peer, absolutely, that was when I started to get excited. Because Africa is an incredible continent of people. The people are absolutely wonderful. It is a basket case of centralized control. So wherever there's a centralized control and power, Africa's a nightmare. The governments don't perform, the corruption, all of that is not great. The point around it is decentralization is we need to empower. That's why the name of the company is we need to empower the people, because if we can empower the people, they will solve their own problem. We need to take the constraints away and support the people. So absolutely, to your point, do I believe that has had an impact? Absolutely, because the centralized, controlled environment doesn't work. But the people do work, and they work hard, and they are innovative and creative and do amazing things. How can we empower them is the question. And that's really what my personal passion is, what the company's passion is, and what I believe we can actually have the fundamental impact on the continent.
Thank you so much, Glenn. This has truly been an insightful conversation. So I think for me, I would just want to get your thoughts looking ahead. What's your vision? You talked about your passion and the impact you have had so far, but what's your vision for the future, especially as it relates to blockchain and transforming affordable housing in Africa?
Our mission is to enable 1 million people to have access to a home, to have access to a proper home. That's our mission. Our big, hairy, audacious goal is to have that by 2030. Okay. Whether we achieve that or not is not important. What's important is that we're setting that out as a goal, because that is still only 2% of the market need, of the market size. That's the potential in this market. It is massive. It just needs an opportunity to demonstrate how it can work, how it can provide market and above market related returns without exploitation, without really, exploiting the people on the ground. And that, I think, is the really exciting part, because if somebody's already paying between 4 and 7 times more to live in a shack than they are to live in a professional house, that gives you the arbitrage opportunity. That demonstrates where the value can be created and how we can create value for investors and for the people on the ground. So it's possible. And that's our objective. And we, invite people to support us in this journey. We have this this constant refrain: join our journey, because it's decentralized. Just join our journey. Come along for the ride. Let's see what we can achieve in this space, because we believe we can really make it happen.
Glenn, thank you so much for taking the time to tell us about the brilliant work that you're doing in this space. It sounds truly innovative and a mission that's really worth trying to succeed in, and I really hope you do.
Richard, thank you very much. Thanks for your time, and thank you.
Okay, so that was such an insightful discussion with Glenn, and just really listening and hearing his take on especially how Empower started and blockchain and how it can be used within the affordable housing sector. And a major takeaway for me from the discussion was just the important role that technology can play, or rather is playing, in solving the affordable housing puzzle. It really reminded me of the episode we had with Sumeda, that's the CEO of Syntellect, and just their flagship product, which is Right Profile, which is basically using AI and machine learning to ensure that the unbanked and those in the informal sector have access to mortgages to finance their dreams of owning their own home. And then looking at drawing that parallel between using blockchain to create a new system where people can have access to different models, especially the pay as you go. That was quite fascinating for me, and just really emphasize that in this space that we are in currently in the world, technology can do so much good. It's just a matter of harnessing it. What did you think, Richard?
I completely agree with you, Favor. Although I would say there's some interesting subtle differences in the approach that, say, Syntellect are taking and Empower are taking. So with Syntellect, what they're doing is they're looking at the challenge, which is that people don't have access to mortgages, and because they don't have access to mortgages, that they can't then get the quality affordable housing that they need. And what they're trying to do is say, well, how can we expand mortgages so that mortgages reach more people than conventionally they do, by enabling those in the informal sector to have a credit rating. And once they have a credit rating, they can then access a mortgage. What Empower are doing, by contrast, is they're saying, let's sidestep the whole mortgage industry. Let's try and find a way using blockchain that people can have a pay-as-you-go repayment system, a pay-as-you-go mortgage through blockchain, which doesn't require the traditional financial system, the financial sector, in the conventional way that it normally would. And that's interesting. And a lot of the time in countries, certainly across Africa, but I've seen this firsthand in Nigeria, what you see is there's a lot of workarounds that can come through with the innovation. So, let's take, for example, in the agriculture sector, in agri-tech, for example. Traditionally, when you look at the problem of farmers don't have access to tractors, you're trying to find a way to get the farmer some finance so that he can buy the tractor and own the tractor. Whereas what we've seen from agri-tech is companies like Hello Tractor come in, who are doing incredible work, trying to then match tractor owners who own the assets with farmers, so that they can be like the Uber of tractors. They can get that tractor to the farmer at the point when he needs it for his farm, and he uses it for that point in time only, and he pays a sort of rent or lease or whatever it is payment that's associated with the time he uses it for. But he doesn't need to buy a whole tractor himself. He doesn't need to own it. It's a workaround from the problem. It's a different approach to things. And Nigeria was full of companies, very innovative countries, very innovative companies coming up with workarounds to some of these conventional problems. And this is what I think we're seeing Glenn and Empower doing, right? They're finding a workaround. They're finding a faster route. And it's a good approach to have, because we've seen this at a mega scale with cell phone technology. The route to the internet used to be that you'd have like a landline and you'd have a dial-up connection and then you'd have a fiber connection perhaps. But for many people, particularly those in rural areas, they've been able to shortcut all of this just by GSM, by cell phone technology, and being able to access the internet that way. And that's enabled many people across Africa and other countries to jump ahead without having to do all that intermediary infrastructure that's required otherwise. And I think Glenn's kind of trying to do that with the financial sector, right? He's trying to say, well, yeah, we could try and build everything up and we could wait for the financial sectors to start offering the diversity of products that are required. But actually, there's this blockchain technology here, and we're going to try and use it to give a product that meets the needs of the individuals wanting to get into affordable housing immediately. And he and his team are working on that, and that's quite an interesting approach to take, and one that has been very fruitful across Africa.
I think you really hit the nail on the head with that point, because the question is, why do we need this kind of technology in the first place? And it's because traditional models are limited. And so it's a matter of, okay, how can we innovate to ensure that we are able to fill the gap that traditional models have been unable to fill? And I think in doing so, in innovating, there is an importance of being agile and basically embracing the iterative process, which I think Empower has done really well. I mean, Glenn spoke to us about how they started with NFTs while using the blockchain technology. And then it got to a point when they realized, okay, this is not sustainable. This is not painting the picture that we want it to. And they pivoted. And I thought that was really amazing, because it could easily have been a scenario where they were like, this isn't working. Oh, we need to take a step back, or let's just close everything down and go somewhere else. But instead they pivoted, because he asked himself the question, why am I doing this in the first place? And I remember he talked about the fact that people were paying for square meters of shacks more, like almost 3 times more than people were paying for apartments. And that really took him aback. And I think maybe that was what he held in mind by not giving up when he realized, okay, NFTs weren't working. It was now a situation of don't throw away the baby with the bathwater. They were able to keep this aside and then really say, okay, let's go back to our drawing table. Where can we iterate here? How can we come up with a process that can be even more effective? And look, that is why Empower is where it is today. And I think that is really another important aspect that must be considered, especially when working with new technology.
Yeah, I think this is a vital quality that Glenn and his team have had, is that being agile, being able to be iterative, to try things and to not be scared of failure, right? And not being able to, not be scared to dust yourself down and get back up again and try a slightly different route. Because, in Flywheel Economics, we look at economies as ecosystems. We look to nature to sort of be able to find those ways in which the systems work together. And as they say, nature finds a way. And nature finds a way. So what we're seeing is that very effective private sector companies are trying things where they get resistance, where they get pushback, where they can't get through. They adapt and they try something different, and they see if they can get traction with that, and they see if they can find a way through that way. And Glenn and Empower have done exactly that. They tried with the NFTs, didn't work. Does that mean they gave up? No, they just tried a different route, and they're their route has a lot of potential, right? So they've solved half the problem already with this. Now, what they've got to try and do is find a way to get the more conventional investors involved, and that's the bit that they're at the moment. Will they find a way through? Well, time will tell, but they've got the right mentality and the right approach that gives them every chance of succeeding.
Just talking about finding partners and finding a way within this space is that's another major takeaway for me, which is the fact that because this is an evolving space, there's definitely challenges to overcome, including regulatory hurdles, and that for me it brings another reason why they must embrace partnerships. And he talked about the partnership that they are creating with the Kenyan Securities Exchange, which is so key, because we're talking about a space where few people I believe have even begun to explore. So it's now a matter of, okay, how can we make this work by finding the right partners that we can hold each other's hands so we can go even further.
Yeah, and it's interesting that you use the expression, holding hands with the regulator, because I think generally the story of innovation and technology in Africa and other countries has been about technology taking the lead, disrupting, and the regulators really struggling to catch up with the technological innovations. And I think what's quite nice here is Glenn and his team are trying to do it in a collaborative way with the regulators, and they're trying to do it in a way which takes them with them, and that's it can be an extremely powerful approach if they get it right. There's also risks to that approach, because we have seen that when companies have tried to not be disruptive and tried to do it by holding hands with the regulator, sometimes things don't move. Things can go for years and years and years without having any development. Why? Because the regulator doesn't need to take any action, because it's already within their control. And putting the regulation in place can take a lot of effort. It can be, hard work. And if the companies are saying, well, look, we're waiting for you to move first, well, then they'll move at their timetable. And so, the consequence of that can be years before people get access to this life-changing innovation potentially. So, what's the way forward with this? Is it? I'm not by any means advocating companies to sort of, break things or, move ahead, as fun as it is to sort of outpace the regulator. But I think what we have started to see in many countries is this idea of regulatory sandboxes, these areas where the regulator and the technology company, they have a safe space to innovate, and the regulation then works hand in hand with the innovating tech company, and they do it together and they find a way through, and it's deliberately set up in that way. And many countries are starting to follow that model, and I hope very much that that's one in Kenya where they can sort of also tap into, so that it is exactly as you said, done in hand, but not in such a way that the innovation never happens or the innovation gets held back by bureaucracy and red tape. So it's an interesting tension, it's an interesting dynamic, but I think regulatory sandboxes are providing that sort of nice middle ground of a way through all of this, between the sort of holding hands but not making progress, and making progress but then causing a lot of upset along the way. And I think if you look back to the time in about 10 years ago when some of these digital remittance companies were coming on stream, the regulation wasn't there, right? And so suddenly millions and millions of US dollars were being transferred into countries across Africa, South Asia, and other places around the world, diaspora sending money home. And it wasn't going through the conventional banking system initially. It caught the regulator unaware, right? It was all coming through digital platforms. And the regulator then started to play catch up. And in Nigeria, this worked out by the central bank putting a freeze on all digital payments coming into the country until the regulators until the digital remittance companies sat down with the regulator, sat down with the central bank, and tried to work out a way forward. And it was one where the companies had to sort of go, perhaps cap in hand, apologize for sort of breaking things, and then, trying to sweet talk the central bank and the regulators into allowing that infrastructure. And they eventually got there, but it wasn't by any means inevitable that they were going to get their way. And it was something where it was a lot of risk involved by all sides concerned. So, these regulatory sandboxes are a much better way of doing things than the alternatives.
I think it's just reflective of the Flywheel Economics principle that talks about economic policymakers as gardeners. And one thing that gardeners do is taking a look at what is working or what is growing, and then cultivating an environment for it to continue to grow, not clamping down, not saying, oh, I'm going to move. You have to be sensitive to your environment, and then you have to continue to now cultivate. So I think that's where this partnership comes in between the regulators and then the innovators.
Yeah, that's spot on. Exactly to the sort of flywheel economics principles there about being a gardener for seeing what good things are happening and allowing those things to grow. And unfortunately, that attitude is relatively rare in terms of particularly amongst regulators who tend to be quite risk averse and tend to see more downside risk to innovations than upside risk. But there certainly are those kind of regulators coming forward, particularly over time as they work more with the technology companies. There is a bit more of that positive mindset coming through, and really pleased that does happen. So look, I wish Glenn and Empower a lot of luck as they go on this next part of their journey. I think if any team could be successful in this, it's Glenn and his team, because they take the right kind of approach, the right kind of attitude to this. And, who knows, maybe we'll see blockchain and pay-as-you-go mortgages as a result of the blockchain technology being the new way of doing things for millions across Africa in the future. And if it is, all credit to Glenn and his team for the initiatives that they're taking. So this is a good point to wrap up today's show. And we will have a few more episodes in the affordable housing ecosystem or mini-series that we have, because I think it's just the more we delve into it, the more interesting aspects of it we find. And so if you're enjoying it, please drop us some comments. Please drop us some feedback about which aspects you're finding good. And over to you, Favor, for the end bit.
Yes, exactly. We are inviting you to join the conversation, and would love to hear your thoughts on this episode. Especially, you can tell us how you think blockchain can be used to create more affordable housing solutions. Connect with us on social media. Our handle is Flywheel Economics across X, Instagram, Facebook, and LinkedIn. Let us know what you think. And if you're interested in learning more, we have more resources on our website at flywheeleconomics.com. Thank you once again to Glenn Jordan for sharing your expertise and insights with us. And thank you to our listeners for joining us on this very important discussion. We hope you have enjoyed this episode. Thank you very much. And until next time, this has been the Flywheel Economics Podcast.